Hey, welcome back everyone, and good morning options traders. Well, most of you know that in at least a lot of the videos, I do overlays of profit and loss diagrams, but they're typically done in Excel. And I usually do that just to make it a little bit clearer for the videos. But I've had some people ask, can you do that in Thinkorswim? And the answer is yes, but it's not real easy to see how it's done. They don't make it real evident. So it's a good question. So let's find out more about what it means to be an overlay, why you would use it, and then how to do it in Thinkorswim. So it all gets down to your strategies and analyzing them, and it's always helpful to overlay two or possibly more strategies. And the main reason for doing this is that it allows you to see the trade-offs. You can see where they are equal, you can see the max losses, how much different are these max losses and how much different are the max gains. Are there crossover points? The answer is yes. Remember, all strategies have at least one crossover point, and that's where they're equal. And so we want to say, where are they equal and what are those values? And it will help you to figure out which strategy is best for you at that moment. So as an example, here's a vertical spread. So we're looking at the 100, 105 vertical. There's our bends at 100 and 105. So I'm long the 100 call and I'm short the 105. And in this example, we could lose a maximum of 3. This is the amount we paid, and we could therefore have a max gain of 2. But let's say that we wanted to compare this to a long 105 call by itself. Maybe these are the two strategies that we're considering. What would they look like together? Well, here's an overlay. And so now it becomes very easy to see what the trade-offs are. First thing that stands out, if you look at the blue line on the vertical spread, it sits higher on the graph than the red. So it shows that the 105 call by itself could certainly lose more money. So in this example, we could lose a maximum of 4. So that's one thing you can use to do your analysis. We've got a maximum loss here of 3, maximum loss of 4 with the long call. Over here is a crossover point. As I mentioned, that's where the two strategies are equal. This would be at a stock price of 111. They both produce exactly the same profit, which in this example would be $6. But beyond this crossover point, we can see that the red line sits above the blue. The long call actually outperforms the vertical spread. See, that's not true over here. Over here, the red line sits below the blue. It underperforms. But on this side, it outperforms. And then in this area in here, the blue outperforms as well. So it helps you to see where the stock is now, where we think it might be going, what these max gains and losses are, and which strategy might be best for you at that moment. So that's the reason that we do the overlays. So again, it's easy to see in an Excel spreadsheet like this, but how would you do it in Thinkorswim? Well, let's go have a look. Okay, so now that we're into the Thinkorswim platform, I just happen to have Microsoft up here, so I'm going to use that. And the way that you do an overlay is you have to go to the Analyze tab up here. You could actually go from the Trade tab and actually kind of export them into the Analyze, but a lot of times it's easier just to go straight to the Analyze tab and then click on this tab that says Add Simulated Trades. So let's do the example that we just looked at. Let's look at a vertical spread compared to an outright long call. I'm going to go down to the strategies. Let's pick maybe this one right here, March 11 with 31 days. And I'm going to select vertical spread from this menu. And that's going to put my platform into a vertical spread format. So it doesn't really matter. Let's pick the 300, 305, trading for about 385, and it's going to bring it down here. Now we'd like to compare it to another one. Let's go to single, and let's compare it to, we'll use the same expiration and use, let's say, just a long 310 call, trading for 670. So click there. So now notice down below are the two separate trades. Here's the vertical and here's the single. So if we click on this next tab at the top, risk profile, it's going to show us these. However, what it's doing is it's showing you in combination. It's showing you what both strategies acting together are going to do. And really, as a trader, this is ultimately what's most important. But what if we wanted to see them individually? Well, another thing you'll need to make sure is that your selections up here is set to single instead of coming down here to expiration where we can see each strategy with a current curve and an expiration graph. Okay, so we just want to make sure this is set to single. And what you're going to do is to come down here. Now, if you look over to the far left, do you see these check boxes? If I uncheck single, notice it is just showing me the vertical. If I just check single, uncheck vertical, it is just showing me the individual 310 call. I don't want to see them together, how they will behave together. That's that profile. I want to see them individually. So the way we're going to do that is to uncheck both of these. And then in this little icon, remember I said that Thinkorswim doesn't make it real apparent, but you're going to click right there. You see how that shows up with the number 1? It's now showing me the vertical, and if I click here, it's now showing me the single. And so there they are. It's not showing me in combination. Now I could do that. I could click on this box right here, and there it's going to show me the combination. That's what we saw before in purple. So I'm going to uncheck that for right now. So there they are. So if we zoom in a little bit, pretty close to what we saw before. We can compare the max losses on this side. We can see a crossover point. Looks like in this example it's going to occur at around 319. Look straight down below. And I can also see that the long call eventually outperforms the vertical spread. But at what point will it start to outperform? Again, that's going to be about 319. So you need to take that into account. We can also look at the break-even points. This little red vertical hash mark shows me that the vertical spread breaks even way back here at about, let's call it about 302, whereas the long call breaks even up here at about 316. You need to account for that. What if we wanted to do different sizes of positions? Maybe I'm considering one of the long calls right there and 5 vertical spreads. Thinkorswim will rescale that. Okay, so it's a very handy tool. And so hopefully it gives you a better insight of how to use it, because it's something that every options trader should know. Otherwise, you're not going to know how to stress test a position and find out which one is best for you. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. There's even a Thinkorswim training course. You can find it all at optionsatoz.com. Also, please join us on the Facebook trading group, Options A to Z, and you can find a link in the description below.